Hey traders, for today's trade we're looking at a covered call strategy on Dow Jones stock Johnson & Johnson. So looking at J&J on MarketSmith, the stock has been a significant underperformer of the past few months. Unlike the rest of the market in 2023, shares have been in a strong downtrend, clocking in 8 straight down weeks. Shares are trading below both their 50-day and 200-day lines. Meanwhile, the Diversified Medical Industry Group currently ranks number 185 out of IBD's 197 groups. The one thing the stock has going for it is a strong 2.9% dividend yield. So with today's covered call strategy, investors can further enhance the yield on this stock. This is a great place to start for options beginners. A covered call is a simple strategy designed to collect income while also defining a predetermined exit price at which you'd sell the underlying stock. So say you buy 100 shares of a stock, covered calls can allow you to lower the cost basis of the long position via selling call options against your position. As the seller of the call option, you're obligated to hand over your shares to the call buyer at an agreed upon price, known as the strike price, if shares trade above this price at the expiration date. In exchange for this, the buyer of the contract pays you a premium. Any appreciation in the stock above that strike price represents a profit for the call buyer. But if the stock instead declines in value, the buyer would have no reason to exercise the right to buy it for a higher cost. In this case, they'd likely just allow the contract to expire and lose the premium paid. So with all of that said, now that you have a better understanding of this cover call strategy, let's take a look at my trading platform and set up a real-life trade in J&J.
So buying 100 shares of Johnson & Johnson here would cost around $15,405. In addition, a May 19th expiring 155 call option can currently be sold for around $5.10.
Buying 100 shares of J&J would cost around $15,405. In addition, a May 19th expiring 155 call option can currently be sold for around $5.10. This would generate $510 in premium per contract and increase the annualized yield of the stock significantly. Selling the call option generates an income of 3.42% in just over 2 months, equaling around 16.7% annualized. If J&J closes above 155 on the expiration date, the shares will be called away at 155, leaving the trader with a total profit of $608, which is the gain on the shares plus the $510 option premium received. That equates to a 4% return, which is 19.7% on an annualized basis. The risk to the downside with this trade is that J&J might continue to drop, which could wipe out any gains made from selling the call. This is definitely a possibility here, given the stock's recent weakness, and should be taken into account before you place this trade. As always, remember that if you're new to options, make sure you practice with a virtual account before risking any real money, and remember that options are complex and investors can lose 100% or more of their investment in some cases. Check out the new Options Trader app from IBD for more digestible options education and tons of great trade ideas. And be sure to join us here for our regular options content where we break down a new trade idea every day.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.